introduction. Hi, Pär. How are you?
I'm fine. Thank you for having me.
We are honored that you could join us today. And we are very keen on knowing, because you've been a stalwart or a backbone of the Stockholm and Swedish and the Nordic ecosystem. So if we could go back a few years, rewind maybe a couple of decades, and you could tell us like how it all started with Sting and then various other components in the ecosystem. So over to you.
Yeah, my pleasure. Thanks a lot. And please put forward things in the chat, and Naimul can raise them if you want to address something. So I worked with full-time with startups since 1999. And before that, I have been in industry as CEO in several tech companies. I lived also in the United States for some time. But in 1999, I started work only with startups. That word startup was not invented at that time. But I worked with laser technology companies and radio technology and sort of very deep tech, complicated things for a couple of years. And then 2001, I got the possibility to start what today is Sting. And the idea with Sting from 2001, which is the same idea as then, it was actually to build a system with components that makes it possible to nurture and grow a higher volume of successful new companies in Stockholm. And it's many who say, talk about a system, but we took that extremely seriously. So I went around the world for half a year first, 2001, to see what had been done in other countries. And I spent quite a lot of time in Israel, 2001, because they had just kickstarted a new ecosystem in Israel in 1995, when all the Russians researchers came from Russia after the wall came down. So I was very much inspired by sort of this system idea. And I'll explain a little bit about that. A system, to me, is something that is based on a couple of components. And all are working very nicely together to achieve a system overall goal. But if you haven't sort of designed things and thought, okay, what is needed, what do we miss in the system, then it's actually not a system. Then it's more like a pizza or something scattered around. But we have had a system idea from the very beginning. So 2001, we designed sort of 15 components. We said, we need these 15 components in Stockholm. Which of these components should be Sting's core? What should we manage on our own? What components are missing? They're not existing at all, but we need them, but we're not going to be operating them. And what components are already there that we can tap into and collaborate? So in that way, we've had all the way since 2001 a system approach. And over the years, we have always asked ourselves, okay, what components are actually missing today in Stockholm? Can we fix it? Shall we do it ourselves? Can we inspire somebody else to do it? Etc. So the system approach have been extremely important for our 22-year growth.
Hold on. So great insight, Pär, like the system approach, and then kind of finding these three areas you said, that what can be your core, where can you collaborate, and what is missing in the ecosystem. Over the years, there have been several initiatives that you have been involved in after Sting. Would you like to name a few and your journey in those specific ones?
Absolutely. So our core in Sting is a large, very extensive incubator and a large, very extensive accelerator, and also an angel investment company called Propel Capital, which is the largest pre-seed investor in the Nordics. That's sort of the core things in Sting. We are 23 persons working with 35 new companies per year. But then we have, as you indicate, Naimul, we have seen over the years that there are things that we miss in the ecosystem. So then we have tried to fix that and not necessarily run them our own. So the first thing we did in 2005 was to start the first Swedish angel network with 11 members. 2 are still there with us. It's Jane and Marcus Lindstedt. So we started the first angel network 2005. Then we started our first small venture capital fund 2007, which was a small fund, early stage fund with both public investors and private investors in the same sort of small fund. Then around 2010, we realized that this digitalization, where lots of entrepreneurs who could, to low cost, start something with a laptop and sitting in Wayne's coffee shop, we need co-working spaces. I was very much inspired 2011 by one of the really cool co-working spaces in San Francisco, Rocket Space. So when I came from that trip 2011, I said, let's see if we can start a couple of co-working spaces in Stockholm. So we initiated SUP46, which was the first sort of commercial, really successful co-working space. And we owned part of that, but it was managed by, not by Sting, by a separate management. Then we kickstarted Things, which is another co-working space. And also we were heavily involved in the third one, which is H2, which was addressing health startups. A couple of years later, we kickstarted a matchmaking platform between corporates and startups to help the startups get their first customers and to help the corporates to find innovations outside their organization. And a couple of years later, that became Ignite Sweden. It started within Sting as with the name Team Up. And almost the same year, 2017, we started the first, or not the first, but a new early stage venture capital fund called Luminar Venture. And because at that time, 2016, there were very few early stage VC funds left. Most of them had died. So we kickstarted Luminar Ventures, and now that is running on fund number 2.
Yeah.
And we have also started Propel Capital, which is a really large angel investment feeder fund. We're now running on Propel number 6. We've done 210 investments, the largest pre-seed investor in the Nordics. And as you understand, some of these things we don't operate in-house. We kickstart them, we sit on the board, we are helping them to get it off the ground, but it's not our core. But some of these things are our core.
Awesome. That's a long list, like from SUP46, doing great work, Things, H2, Ignite recently had their large event. Luminar Ventures was last week before last. They were on my talk on Startup Grind. So these are all amazing components of a vibrant and rich ecosystem in the Nordics. So a big thanks to Sting, a big thanks to you for being the initiator of these amazing startup support networks. Now, question is, I'm very curious about Propel Capital, because that's, you said you're on Propel Capital number 6. So what's the relationship, if we can maybe spend, let's say, a couple of minutes, like, what's the relationship between Sting and Propel Capital? Is it something that you also look at outside deal flow? Is it Sting only? And what kind of startups eventually go into Propel's boundary?
Very good question. So Propel Capital is not a traditional venture capital fund. It's a feeder investment company to feed angels with very good deals. So it's very closely connected to Sting. Propel Capital is only investing in companies that have been admitted to Sting's incubator or accelerator. And the money comes from business angels and from SUM Invest, which is a public limited partner. So we do 25 investments per year. 500,000 SEK per company. So now we're running on Propel number 6. We're going to do 55 investments from Propel 6. And Propel does not do any follow-on investments. So we cannot produce a maximum profit in Propel, because then you need to do follow-on investment in the best ones. We don't do that. The angels do the follow-ons selectively in the companies they like. That's why we call it a feeder. So when the companies get into Sting, they can get 500,000 investment from Propel Capital. But the big thing is they access 35 of Stockholm's absolute most experienced business angels, who then do follow-on investments and get in their board and help them further on. So it's a feeder platform. We have helped start 6 other platforms, copy of this, in different cities in Sweden. So the same concept is now connected to the incubator in Luleå, in Malmö, in Gothenburg, in Uppsala. So we have created a national network of sort of Propel copies connected to incubators in the different cities.
Okay.
So in that way, we have created the first sort of real national angel community.
And that's awesome. Like, I think the main thing that startup struggles at a very early stage is access to the capital. So this connection with an accelerator, incubator, and the capital at a very early feeder network, as you're saying, I think it's a great idea, and it's now been replicated 6 different places. So great work on building that side. I'm actually picking up, before we go into our discussion on the ecosystem side on the Nordics, I have an interesting question here from Manish. He's an investor in Connect Sverige network. Thank you, Manish. A question from your extensive experience in investing in startups. How important is it for an investor to be involved in strategy and operations of a startup, especially in very early stages? Would you propose a more hands-off approach towards startups, giving them independence and systems, as you say? So I think the question here from Manish is like, how deep should an investor go in a startup strategy and operation?
Yeah, that's a tricky question. There is so many things in early stage that are risk and uncontrollable. It's luck, timing, and lots of things that you cannot control. And to add hands-on value in early stages is very costly. Takes a lot of time. So if you're going to do that as an investor, you need to have capacity and money to do that. And because it takes a lot of time. And if you can afford that as an investor, yes, please do, but it's very costly. It's very costly. I could take another position here and say, well, early stage is a numbers game. So invest in many and cross your fingers, because it is a numbers game. Early stage, it is not, to my experience, it is not possible to sort of select the winners really early. There's so many things uncontrollable you cannot control. So the best strategy usually is in real early stage is to do lots of investments and bet on many. But if you then of course can add operational hands-on experience, but that is costly.
Very good points. And I would like to kind of add one more question from my side, because you have a lot of experience on really early stage and also the angel side. And picking up from the point that Manish is making and what you just discussed, if you have an angel with some money and you could put it on a few very interesting ideas, how broad should you go? Is it important that you hold back some of the money for follow-on investments as well? Because that'll then restrict your ability to grow a lot on the first level deployment. So how should an angel use their capital wisely, or is follow-on very important from an angel side? Or should you have the capacity to follow on, then how much should you be able to follow on with? I don't know, maybe that is, yeah.
I got the question. And first back to my earlier comment that it is a volume game. It is a volume game. So you need to do many, usually, first investments as an angel, because you cannot pick the winners. So first you need to do quite a lot of investments. And then to protect the money, you need to follow on in some of them. That's the first challenge. How do you say no to 80% of them in the next round? And just select because you fell in love with them. So it's important as an angel to have very sharp criteria. When shall I follow on invest in my portfolio? Otherwise, you sort of get hooked and get in love with all the companies, and then you follow on in many of them, which is usually not a very good idea. On the other hand, if you want to give your portfolio the best possibilities to attract money from larger players in the next round, then it's really important that you at least can invest your pro rata share in that round. Because if you lots of investment and then you don't participate in the next round at all in any company, that usually sends a signal to the next investor, there's something wrong with this company. The early investors, they do not at least take even their pro rata share.
Okay.
So it's important to at least be able to money-wise defend your position in some of the companies in the next round, because that helps a lot to attract other investors.
And if we switch this, like, great points, if we switched it to the entrepreneur side, then maybe the entrepreneurs also need to look for angels with a follow-on capacity, or at least the ability to defend their positions.
Exactly. We always, so that's why in Sting, we only have angels that have quite a lot of money, because if they can't do follow-on investments, they will become lame ducks. And the other investors, they are then, they get worried. Why don't these first investors follow on? So we only want to have, at least in our companies, angels that have quite capacity to do a couple of follow-on investments. Otherwise, we don't help the companies long run.
Okay. Amazing point. So it's a vetting game on both sides.
Yeah.
So the startup accelerators are helping vet what are the startups with really, really big potential to make it to the other side as a expanding company. And at the same time, for an angel network or an angel entity, it's very important to have a vetted angel body or members who have the capacity to pull through the stages of these startups and at least retain or defend their positions. Great points. Let's move to another area. Like, you've worked, you said that you have worked globally, you have been in US, but if we come to Nordics, okay, I'm very curious in understanding, like, what is it which makes Nordics unique? We are on top of innovation, and now recently Stockholm city has gone out with home of impact positioning. Nordic has been around. So somehow, in addition to the innovation and startup building, impact has come in. And then there is the third level of measure which always comes out, like, this is a great place, happy place, welfare systems. So what is the secret sauce to this ecosystem? Like, why are we so, how does Nordic have this unique position? If you could share some perspective on this.
Thank you. Yeah, this is a very interesting question. I mean, first, the answer is based on things that have happened during sort of 100 years. The Nordic countries are all small, and not all of them, but many of the countries have been forced to go international very early because we don't have a domestic market. That has been especially true for Sweden, where Sweden have been developed over the last 100 years an amazing number of large international leading corporates, more than any other country in the world related to per capita. So the size of our countries, I think, has been very favorable. We know if you're going to build a big company, you must go international day one. And I think our large corporates inspire young people to think like that. Then you have a cousin or a mother or father or something who's working in Ericsson or IKEA or H&M. So many people in Sweden, okay, yeah, if you're going to build a company, it has to be an international company. So that mindset, I think, is really important, but that has been developed over many, many years. In many other countries, for instance, Germany, you don't have exactly the same, since it's such a large domestic market. You don't really need to think international day one. This is one reason why many investors like the Nordics, because we're thinking very go global direct. So that's one point, but this has been developed over so many years. The other I would say is the progressive values you will find among the Nordic countries. The Nordic countries are, in many aspects, driving progressive values when it comes to gender balance, climate issues, and things like that. And I think this sort of history of having progressive values is you don't find that in all other countries over the world. Another thing is this with hierarchies. The very flat hierarchies in business in Sweden. There's not much of upstairs and downstairs. Managers are not telling people exactly what to do. And in some other countries, even in Europe, you have much more hierarchies. The boss is deciding. And there is a really interesting study every year called World Values Survey. Fantastic. You can find it on that. And they ask lots of questions about values in different countries in the world. One of the really interesting questions they ask is, how often do you think your boss is right?
Okay.
And what's fascinating, Sweden's rock bottom low. I think it was 7% in the latest survey said, yeah, my boss is always right. And in Japan, it was sort of 90%. So this with flat hierarchy, I think, is really driving innovation. It's important that not think that your boss is always right. That doesn't create innovation, really. Then there's a lot of openness to new ideas in the Nordics. We have always been adapting things a lot from the States. This has been a trial market for many new ideas because there's an openness to new ideas. Highly educated population, which also has been extremely good, of course. And then political stability is another factor. The Nordic countries have been politically stable for many, many years. The gender equality is another thing. We are in the forefront of gender equality, and we all know, or should know, that successful companies are, as in society, it's gender balance. Otherwise, it will not be as good as otherwise. I also would say that there's a culture of collaboration in the Nordics, coming from kindergarten. Or nursery school here, kids are taught very early that, well, question authorities, think on your own. And in some other countries, when you go to kindergarten, kids are supposed to stand in line and listen and be sort of all that. And that, I think, this sort of cultural collaboration is really important. And when it comes to engineering in Sweden, I think Swedish engineers are really good at collaborating to build something without a detailed specification. And finally, I would say that there's a collective trust in public institutions in the Nordics. Most of us believe you get bang for the buck with the tax you pay. It's not corrupt. If you pay tax, you get something back. So we trust institutions, and which I think this trust is extremely important in a society, the mutual collective trust. That's a couple of quick things.
I'm just writing it here and summarizing it, but great points. So we started with go global, progressive values, gender balance, climate, flat hierarchies, where you talked about that 7%. Great statistic over there. Openness to new ideas, highly educated, political stability you mentioned, which is, I think, many of the regions in the world are not politically stable, which makes ecosystem building challenging over there. And a culture of collaboration. So I think this is amazing of collaboration. I'm just writing it here. So this is the playbook. Yeah, awesome. So, Pär, thank you so much. Before we move into our discussion a little bit more towards the acceleration, I know there's a couple of questions coming in on the accelerator side, Sting side, and the startup side. One final question I have about ecosystem building. What do you still think are the biggest challenges on the horizon for us as an ecosystem? What are the nuggets which still need to be cracked, which need effort, which need political will, which need probably a combination of ecosystem builders or resources to dive in and solve?
Yeah, thank you. I mean, the gap or the missing piece, there's always something that is a bottleneck, and that bottleneck moves all the time. Right now, we see a very definite identified challenge or bottleneck or whatever you would like to call it. And it's related to our biggest problem ever in the world. There is no bigger problem than the climate change. If we don't fix that, we are in deep shit. And we're almost on the way there. So the climate, we must fix that. And to do that, it's usually, not always, but usually the solutions are pretty big. And they're usually sort of what we call deep tech solution, complex technologies that requires quite a lot of money to prove that it even works.
Mm-hmm.
And there's a lot of innovations in this area, but in Sweden, at least, I think actually it's a little bit better in Finland. There's very few early stage deep tech investors, very few. This has been addressed by Vinnova in a recent report, and also by the government in a report. And it's too much money for angels, because these companies perhaps need 5 million SEK just to come up with a prototype or something. And before that, you don't know that it even works. And after that, you need 20 million. And even at that time, you don't know it works. So a digital startup, well, you know, within a 2 million, 3 million, you know if you get market traction. So these complex solutions to our big problems are much, much more challenging to find investors to. And the traditional venture fund structure is a very bad fit. Because these companies are usually, the time horizon from start to when they sort of really can be sold or acquired or listed is usually 15 years. The traditional venture capital funds, they're usually 10 plus 2 years. So it's very difficult for traditional closed-end venture funds to invest in early stage deep tech. Very difficult. Most investments in Sweden in early stage deep tech is done by family offices and corporates. And the challenge is that we have very few of that type in Sweden. Actually, a little bit more in Finland, which is interesting. So this, I think, is one of the real big challenges today. How are we going to go about to find a way to early stage finance deep tech companies before we know if they fly?
Very interesting. Like, you've hit the nail here. Like, the biggest challenge is climate, and then that requires big solutions, and of course the deep tech track. And in deep tech track, we are short-handed by funding.
Yeah.
And the way venture capital is structured, because the regular tenure is 15 years at least, and then venture capital doesn't. So how could we solve that? Because recently there has been an offentliga upphandling, where I think one of the changes which we see in Stockholm, I think it's coming out in public as well, has been that Almi Invest used to run the primary allocation for the venture capital side on the public side, but it has now gone to a combination or a consortium comprising Trio Impact.
Yeah.
Which probably brings more to deep tech, because the focus over there is more deep tech, because I think that fund really addresses the need.
Yeah.
Because we have a lot of generalist funds now in Stockholm and the Nordic region.
No, I agree. So that is an example of a very good movement. And we need more of that, because some of these deep tech companies come out of universities, and some do not. So we need many flowers here investing early stage deep tech. And usually it's, as I say, too much money for individual angels and too long cycle time for a traditional closed-end venture fund. So we need other more innovative solutions, and Trio is one of them, which will more be like an evergreen. It's quite interesting that 1.5 years ago, Sequoia, which is one of the leading funds in the world, they announced that they started an evergreen, which makes it possible for them to invest in something and be there 15 years. They were one of the few that have done that the last couple of years. So normal VC fund, which is usually 10 plus 2 years, even if they want, they cannot really do this. The risk is too high this early, and the cycle time is too long.
Okay.
That's why we end up with family offices, evergreen structures, foundations, and corporates.
And sometimes soft money, like for example,
Absolutely.
Most of these entrepreneurs at times get the Vinova level 1 and then a level 2, which is good. But my experience is that if you go too much on the project side of funding, it kind of deviates your focus from a creation organization to a reporting organization for the funding that you got. I don't know. I view it that way. There could be different perspectives on it. So
I mean, it's we work a lot with what we call soft money to decrease the risk in our companies before we attract private investors. So we think actually mostly soft money can be if you use it in the right way, it can be very good. But you have to sort of be careful so you don't get intoxicated.
Got it. We have a couple of questions coming up. Let's pick them up because we are rounding towards the end of this discussion. So Sana Moore has a question. What KPIs have you found relevant to, number one, work with internally to motivate your staff, and number two, to show to your funding partners? I think the question Sana is trying to ask here is in context of Sting.
Yeah, got it. We have actually only one goal. I'm going to explain a little bit more. We have one goal in Sting, and that is to turn out from the incubator accelerator at least 25 new successful or later on successful good companies. And the KPIs we are monitoring, we monitored all companies since 2002.
Okay.
We probably have the biggest database now with 420 companies since 2002. The KPIs we're monitoring is revenue. We like companies that create lots of revenue. And we also monitor as a KPI how much of that revenue is outside Sweden, international revenue. Because if they create lots of revenue and also if the majority is outside Sweden, that creates wealth in Sweden. The other KPI is number of employees. So we love revenue because if you create lots of revenue over time, then you can be profitable. And if you cannot be profitable, it is not sustainable. So you must lots of revenue, then you can be profitable, and lots of employees. We love that because in that way we add to the society also. But we are not. We are extremely business minded and only work with companies going to be profitable, big companies. But our KPIs are revenue, international revenue, and number of employees.
Awesome. Thank you. I hope that answers your question. Then I'm checking here. Give me a second. We have Henrik Danielson. He has a question. Hi, Pär, about Go Global. Can you describe how Sting and its partners can support the scale-ups Go Global, Africa, Asia, Middle East, Latin America, small companies with limited resources? How can they benefit from Sting in huge global competitive world?
I think I'm going to be sort of very frank here. We do not have an extensive international network to help our companies establish in different countries. We work with startups here in Stockholm, where they create some initial revenue, usually in the Nordics, and we usually support them 2 years. We don't work with scale-ups. Our companies leave us usually after 2 years. Then most of them will become scale-ups, hopefully, but we do not have a support system for that. So if a company comes to Sting and says, okay, we are 12 persons, we have now a revenue of 5 million Swedish kronor, can you help us in Sting? No.
Okay.
So we only work pre-product revenue. That's what we're really good at. Then we do have some connections, not a lot in Africa. We have a network in Germany and a pretty good network in the UK to sort of find first customers. But our network, we have not built that. That's outside our core.
Okay. Thank you. Then we have another question. You have a climate tech initiative. I've just completed a few Harvard courses in sustainability, and I'm amazed how investors in US have benefited from their sustainable investments. How are the climate tech companies in your portfolio performing?
Most of them very good, I would say. But on the other hand, many of them are deep tech companies.
Okay.
And the shortage of early stage deep tech money compared to the US makes it more difficult to scale them quickly. In the US, you usually get sort of 10 times more money day one than in Europe. So we have a problem. That's why I'm addressing this with early stage deep tech funding. We do have a couple of companies that have become pretty good and pretty big. A couple of listed one in solar technology. Right now, we have a really interesting company in battery technology. But we do have this challenge in Sweden with early stage funding. I mean, one of our companies now, they got 80 million SEK from a soft money provider. But to get that money, they needed 17 million SEK from a private investor.
Okay.
And now we're struggling with that. How can we find somebody to invest in 17 million to get out the 80? Then we have almost 100, which is a struggle because there are very few doing these early stage investments in a company like that. So we do have a disadvantage to US here.
Okay. Awesome. Pär, we are almost at the end of our talk. I would just take this moment to request you for any final thoughts you have for entrepreneurs who are building startups in the Nordics. How should they think about their journey forward? What is it that makes a startup something which can be taken on by Sting, which can be taken on by later investors? Like, how do you build? What's the secret sauce of building a startup that is successful? Maybe that is a very broad question, but maybe you can narrow it down.
I'll try. The first thing is make sure that you address a big problem / need. If you don't address a big problem / need, then it will be very difficult to make it big. So make sure that there are customers out there who verify, yes, this is a big problem and we are willing to pay to get it solved. So that's the first thing, absolutely. Addressing a big relevant problem that somebody is willing to pay for to be solved. So work extremely close with potential customers day one. And hopefully also a problem that is internationally and growing. Then the other thing is, of course, the team. To build a company today is usually a 10-year journey. And during these 10 years, it's a roller coaster drive. And you must be sure that the founders, 2-3 persons or whatever it is, that you can handle this up and down over 10 years without too much conflicts and founders leaving. So the team composition is extremely important, that you have sort of the same type of alignment when it comes to where are we heading, what type of company are we building, how much can I sacrifice to do this over the 10 years and all that. And also that you have a balanced cap table, a cap table where one person owns 90% and the 2 other founders own 5% each. that is not giving a signal that this is a team sport. So the team is sort of all that is extremely important. And is like in marriage, you first you need to sort of perhaps work together for half a year or a year before you know, oh, can we work together? So be very careful with finding a co-founder just on the street and be matched together. I mean, that is usually not a good idea. Y Combinator, they put a lot of effort to this. They are really investigating. How did you meet each other? How do you know each other? Have you worked together before? So to put people together in a short period and high team risk, very high team risk. And then if I will mention another thing, I mean, the customer side and the need and then the team. And then, of course, it's in the end, it's about execution. The innovation per se is usually not, I mean, it's 10% of the value. Then it's execution. How good are you at executing? And it's back to the team. If you have addressed a big problem and you're a very strong team, you will probably find investors, very likely. Of course, it's good if the innovation is based on some sort of barriers to entry. If not, somebody can copy it just tomorrow like that. That is also very good. So yeah.
Awesome, Pär. Like big problem where you can find customers who are willing to pay and can go global with that if you can, and it's a growing problem. The other point is building a team and picking somebody out who you really know and having a balanced cap table, as Pär is saying, and then execution is the key. Pär, thank you so much for taking the time out today and meeting us today at Connect Talks and our community. We really appreciate your time.
My pleasure. Good luck to everybody.
Thank you so much. Have a great day. Bye-bye.